Welcome to the Debit This, Credit That podcast with Wheeler Accountants located in San Jose, California. In this podcast, we discuss how to solve accounting challenges in both your personal life and your business. We take an energetic, tech-savvy approach to solving accounting challenges that steal your focus and your time. Now, on to the show with your tech-savvy accounting experts, Matt Wheeler and Michael Bryant.
Hello and welcome to another podcast. Today, I'm interviewing Michael Bryant, the audit partner at Wheeler Accountants, and this is part 2 of preparing for an initial financial statement audit. Now, before we jump into this section 2, Michael, would you mind giving us a brief overview of what we talked about in the last podcast?
Yeah, the last podcast we covered why financial statement audit was important. We also talked about how to select an audit firm, and we also talked about preparing for the audit.
Okay. So where are we going today? What's part 2?
Well, part 2, first I wanted to mention that audits can be a time-consuming and really stressful time audit recipients. And if actually adequate preparation and communication is happening throughout the audit process, it's really going to be a positive experience. The more prepared you are for an audit, the more money and time you will save.
Right on. All right. So the first phase here is the audit planning phase. Is that correct?
That's correct.
All right. Let's dive in and unpack what does that mean to our listeners?
So in audit planning phase, you really want to communicate all significant changes that have occurred in your business operations, your accounting methodologies, any significant or unusual transactions. Those are all discussions that you're going to want to have with your auditor.
Okay. Can you give me a couple of examples of what might significant and unusual transaction be?
Yeah. So a significant or an unusual transaction is just something that doesn't normally occur in your business. For instance, a nonprofit might get a large bequest. Well, that's going to have a significant impact on their operations. And so having some discussions with your auditor about that transaction. Or for instance, last week I had a technology company that was entertaining a sale of their business. And so again, that could have a significant impact on operations. And so those are the types of things that you really want to be having those discussions with your auditor.
Gotcha. So communicating all significant changes. Now, the next category you have here is initial request list. Now, one of the good things about working with somebody like you is your level of organization. So what is on this request list?
Yeah, the initial request list that we prepare for our client is really to help them organize and get ready for the audit. And so things that would be on our normal request list would be the general ledger, also called a working trial balance, and this would be covering your entire fiscal year. Any internal financial statements that have been created, we'd be looking at the articles of incorporation and bylaws. We'd also be requesting any equity certificates or changes in net assets. We'd be looking for the employee handbook, accounting policies and procedures manual, organization charts and system documentation. We'd also want to see the loan agreements, any security agreements, any lease agreements. We would need minutes from your board meetings and any other oversight committees, the fiscal year budget, and then we would also need access to all the bills and checks that were paid during the year.
All right, man. Now, this seems to be a lot more than just accounting. I mean, you're talking an employee handbook, the policies and procedures, org charts. Why are they sharing this with you? Is this for you to get a better understanding of what the company is and what they do, or is this pretty standard operating procedures?
This is pretty standard. This would be something that we would be looking at for all of our clients. And part of an audit is to get comfortable with the system internal controls. So those are the internal controls that our clients have in in place, and we will do walkthroughs of those and then do testing of certain transactions to ensure that their system of internal controls are working as expected. And then with regard to the organization and those documents, there's a lot of disclosures that go into the financial statements. And so we would need to make sure that we have a good understanding of how the organization's structured.
All right. So deep dive in the initial request list. The next thing you're going to be talking about is cash. What do you mean by cash? Is this just a whole bunch of receipts or what is this?
Yes. So a little deeper dive into the initial request list, and I'll kind of break it out by balance sheet or statement of financial position accounts. So for cash, what we're going to need to be looking at for cash is the year-end reconciliations along with the bank statements. Mm-hmm. And we'd also be looking for details on any outstanding checks or deposits in transit. As part of our audit procedures, we would be sending confirmations. So we would request that you prepare the confirmations, and then we would be mailing them out. We'd also be looking for the monthly bank statements for the entire fiscal year, and we'd look at the first bank statement after your fiscal year as well.
So if you're talking about cash, you're probably also going to be talking about accounts receivable, right?
Yeah, so accounts receivable, what we would be looking for to support this account is a detailed accounts receivable listing. We would probably select certain accounts that were either material or haphazardly selected that we would want to confirm. And we'd be looking at an analysis of collections. So we'd be looking at collections after year end to see if there were any collection issues that should be reserved for.
The next two, I don't know if they are really separate or if they are lumped a little bit more together, but the next two are inventory and property and equipment. How do you separate those, and why don't you tell our listeners why you would?
Yeah, so inventory, what we're looking for inventory, and not all of our clients have it. You know, our software as a service clients don't have inventory, but our manufacturing clients certainly have inventory. And so when we're looking at inventory, we'd be looking at a detailed inventory listing, and then we would also need to be involved in the year-end inventory account. So typically our clients would go out and do a count of all of their inventory at year-end. And as the auditor, we would be out there to observe those procedures and ensure that everything has been counted and correctly documented. And if we notice any gaps in that, then we would be bringing that back as communications and recommendations.
So for some of this hard asset stuff, let's continue that with the property and equipment then.
Yeah, so property and equipment, what we would need for property and equipment is a fixed asset roll forward. So a fixed asset roll forward really shows the beginning balance of all of the classes of fixed assets and then any additions that are made throughout the year. And then if there were any disposals throughout the year, those would be noted, and then you would have a year-end balance that we would tie back to your general ledger.
Now, it also talks about depreciation. Now, this is one of the things that I've heard that a lot of people who own businesses don't really take into account or don't calculate properly. Is that another one of the aspects here?
Yeah, absolutely. We will look at the depreciation calculation. So the depreciation, a lot of times businesses won't count that because it's a non-cash item. But for both tax and generally accepted accounting principles, we do need to record depreciation. So if our clients have been maintaining a depreciation schedule, we will review that. Otherwise, we may calculate the depreciation for them and then go over it with management to ensure that everything's correct.
Fantastic. All right, so we pivot now. Where do we pivot from here?
So now we're dipping into the liabilities section. So the first liability section on your balance sheet would be accounts payable. And the way that we test accounts payable is looking at the accounts payable listing, and then we would match that up with a detailed payments after year end. So we would test those to make sure sure whether they were properly included in the accounts payable listing.
What is another liability?
So other accrued liabilities would include your paid time off. So if your employees are accruing paid time off, that does need to be recorded as a liability. We also look at a lot of our clients have some deferred revenue. So we would look at details of the deferred revenue and see what makes that up and make sure that that's properly accrued. And then we also find a lot of times that there is some deferred rent. So if our clients have received discounted rent or free rent in advance for generally accepted accounting principles, that has to be straight lined and often requires a deferred rent accrual.
You said straight lined?
Yeah. So if you get free rent in advance, then what you have to do is you have to look at all your monthly payments, so all your monthly payments, and then divide by the total amount of months. So even though that was quote unquote free rent to get you into the building, that would still need to be recognized over the period of your lease.
Gotcha. Okay. I just wanted to be a little bit more specific. That sounded like a little bit more jargony than our common listener might understand. Okay. Are there any other accrued liabilities or liabilities?
Well, there is your long-term debt as well. So for long-term debt, we would be looking at a debt roll-forward schedule, which would detail out any notes payable, long-term debt, bank notes that clients might have. And then we'd also be looking for a future maturities debt schedule, and that has to be detailed out for 5 years as a required disclosure in the financial statements. And then if there is debt covenants related to any of those notes payable, then we would want an analysis of the debt covenants to ensure that the organization or business is in compliance with those covenants.
Okay. And now this could just very well be that I'm such a greenhorn with this that I don't really understand what that means. What is a debt covenant?
A debt covenant can be something as simple as the bank requires the business to maintain $100,000 in its account at all times.
Okay.
Or it could be working capital ratios. So a bank might require that a business have a certain working capital ratio that we can calculate to make sure that they're in compliance.
Makes sense. Okay, thank you for clearing that up. The only thing that I haven't heard you say so far is the one thing, or two things actually, that I as a business owner pay the most attention to, which is income and expenses.
Absolutely. So that definitely gets some attention as well in the audit. So we would be looking at monthly revenue and expense, and we would have our clients prepare that monthly revenue and expense analysis. And then we'd be looking at that for variances, and we would be inquiring about variances over our thresholds that we've set up. We'd also be looking at rent expense to make sure that that was properly recorded. We would get details of all the journal entries and then be testing those on a test basis. We'd also look at repair and maintenance. And so repairs and maintenance, oftentimes what we find in there is things that maybe should have been capitalized. So companies bought a new software system, and sometimes that can end up in repairs and maintenance. And so then we need to make sure that that was properly capitalized into property and equipment.
Now, what about your fees and legal fees? How are those reconciled in any of this stuff?
So legal fees, we review legal fees to ensure that those fees are not related to anything litigation. If there is any type of litigation or significant legal fees, then we'll be confirming with the attorney what the case is about and whether there should be any disclosures or a liability recorded in the financial statements.
Okay. Is this whole audit considered an expense? How do you account for all of the stuff that you're doing?
So the audit is accrued as an expense, and it's related to the period under audit. So we would recommend accruing our fee. There is some instances where we take over an audit from a previous auditor and they hadn't properly accrued the fees. And in that case, then we wouldn't accrue because then you would be double counting audit fees in 1 year. And the main thing is just to make sure that we're recognizing the expense in the year it's incurred.
Okay, so we're talking about preparation here. What's next?
So next, once that package has been pulled together, the auditor will be out for field work. And so if you properly prepared for the audit and completed the initial request list, this will go really smoothly.
Okay.
The auditor will be out in the client's office for predetermined days. And during that time, I like to remind my clients to make sure that they are available, that they're not letting half of the accounting staff go on vacation while the auditors are there or having unnecessary meetings or events. Make sure that you come up with dates that will work for your schedule and then make sure that you're available. And then just during field work, communication is so key. So auditors typically have status updates. We try to do status updates with management daily or at least weekly, depending on the volume. But our preference is to go over things daily. So we go over any findings that we have. We go over our open items. So that way everybody's on the same page. And then just as a reminder, just treat your auditor as trusted advisor. You know, we really appreciate when our clients are forthcoming with us and we can kind of help them through a lot of situations, or maybe they weren't clear how to book something and maybe it wasn't booked exactly right. We're going to help you work through that. We're not there to penalize you and point out everything that you've done wrong. It's really, we want to make sure that the audit process goes smoothly, that we're able to have financial statements that are in accordance with generally accepted accounting principles.
It's also in communication, and I think I heard this from you in a previous podcast, that it's better to be forthcoming than it is to make you as the auditor have to uncover things. Is that true?
Absolutely, because more than likely we will come across it. But if our clients are open and honest with us, it just makes our job that much easier. We're in a much better position to help solve any types of issues or concerns that our clients might have if they're just really forthcoming with us.
Gotcha. Now, you have to have a place to work here when you're doing the field work. Why don't you explain to our audience what sort of things you need or want in order to do this work?
Yes. So as auditors, we do need a place to work, and that should be a clean room with sufficient area for the size of the team that's going to be out there. Typically on most of our clients, we're going to have a partner, a manager, a senior, and 1 to 2 staff. So for 4 to 5 people, we're going to need a room that will hold that. We do need internet. We're in a connected world now, and so definitely internet is important. We have other options when internet's not available, like our cell phones, but it is much more convenient if we can have internet. And then just making sure that that location is close to the accounting team, and so we're not having to travel halfway across a campus to be able to ask our questions of the accounting team.
Gotcha. Okay, so what we've done here is we've gone through all of the planning checklist and all of the different things that you guys ask for and give them ahead of time to make sure that they are very, very prepared so that when you can come in, you can get this done in a very timely manner. Then you're in the office doing the field work. What's next?
Yeah, so now it's finalizing the audit. So at the end of the audit, what we do is we'll have a meeting with management and we go over the financial statements in detail, make sure that they don't have any questions about the disclosures. We would go over any audit adjustments that we have. We would review findings, and we have different levels of findings. So a material weakness would be the highest level of finding, and that would mean that a material weakness means that there's a significant chance that, based on current internal controls, that a significant adjustment would be required to the financial statements to be in accordance with generally accepted accounting principles. And then the next level down is a significant deficiency. And a significant deficiency is basically saying that there's a possibility based on internal controls that there could be a material departure from GAAP. And then we also note other deficiencies. So these are kind of what we call management letter comments. So things that we would talk about with management. There's opportunities to maybe strengthen internal controls or do something more efficiently. And we go over those recommendations as well. And that's kind of our value add, that we're looking at many different operations and seeing how they're doing the accounting. And we can kind of bring that perspective to our clients to be able to say, hey, you know what? We've seen this done this way before, and this might be a really efficient way for you guys to do this as well. And then for the material weaknesses and significant deficiencies, we will be asking management to prepare responses. And then finally, in management meeting, we would just resolve any open items that we have from the audit.
All right, so they've gone through that meeting itself. There are other things so we still have a halfway decent amount of things that we need to cover here today, don't we? So what's next?
Yeah, we're not done there. So
everybody's like, man, I'm glad that was over. Nope, we're still going here.
Once management is comfortable with our findings and has had a chance to review the financial statements, then we schedule a post-audit meeting. And that post-audit meeting is going to be with the audit committee and management. And at that meeting, we present the financial statements, we go over our audit adjustments, and we go over any of the findings that we have. And then we also have some required communications that we go over at the same time during this meeting. And then we allow the audit committee to ask us questions about the audit process and any concerns that they may have.
Gotcha. Okay. Now, I'm assuming after all of that stuff is done, there's stuff that you have to do on your end. I mean, does this go anywhere? I mean, is it just all internal? Do you guys have to report any of this stuff? What's next?
Yeah, so we issue a report on the financial statements. And in order to issue that report, we're required by professional standards to do our subsequent events review. And so the subsequent events review would be, we would review the general ledger through that date. We would make inquiries of management to see if anything has changed since we had done our audit procedures. And we would require a representation letter from management dated the same date as our report. And then we'd also, if we had sent a legal letter, we would need to make sure that that legal confirmation was dated within 2 weeks of our report date. And once we've completed our subsequent events, at that point, then we can issue the financial statement. So at the end of the audit, we present our final required communications that would include any findings. We would also issue a report on the financial statement saying that if it was an unmodified opinion, that we noted no material departures from generally accepted accounting principles. And these days, most of my clients want that in an electronic format, so we would send that over in a PDF. There are some clients that still get some bound copies, but every year there's fewer and fewer bound copies being sent out.
You said legal letter, and that for some reason made me really uncomfortable. What exactly is the legal letter?
The legal letter, again, is a confirmation to our clients' attorneys to ensure that there's no litigation or things that should have been recorded in the financial statements or at least disclosed. So if there's an employee that has sued a company, we would be talking to the attorney to see where they are in that case and what's the likelihood that there's going to be a settlement. And if there's a known amount, then we would need to record that if that had to do with the prior fiscal year. And there's also some disclosures if there is litigation going on that would need to be in the footnotes to the financial statements.
All right. So everybody's gone through this, right? What should they continue to do to make it even easier for another audit in the future?
Yeah, so after the audit, just remember to keep those lines of communications open with your auditor. I love to hear from my clients throughout the year when things come up, like we had talked about, a significant or an unusual transaction. They might need some guidance on how that gets booked or how that affects things. And I would much rather hear about that during the year than when we're out there for audit. It just gives us more time to address it, and it can be booked properly when we're actually out there for the audit. And then the other thing that I like to remind my clients is it's just to evaluate the results of the audit. I think of this process as continual improvement. I'm always striving to improve my audit processes and the way that we do things. And I would like my clients to do the same, that they look at our findings and they make sure that the findings are addressed, so those are not findings for next year. And one of the really effective ways to do that is just have the accounting team meet with management and go over those findings and then seek recommendations and prepare that implementation plan and have the vested interest of your whole team.
All right. Anything else that we need to say or we need to do in order for everybody to have a better understanding of this overall preparing for the initial financial statement audit and going through the audit itself?
Yeah, I was thinking we went through the initial request list pretty quickly.
Yeah.
So what I'll do is I'll make sure that we have a copy of that on our website.
Okay.
And it will be titled Initial Request List. So clients can go out there just to see in general what we'd be looking for. When we are engaged to do a specific audit, then we'll have a very specific list of items that we need that are directed to that client, but it will just give a nice overview of generally the things that we're looking for.
Fantastic. Well, you have definitely opened my eyes to some things that I didn't know about today, and I'm sure our listeners feel the same way. So thank you for your time today, Michael.
Thank you for having me, Matt.
I hope everybody has a great day, and remember, preparation makes all the difference.